Hello and welcome to the HomeGirl Tuesdays at 10, and we are here at New Year's Eve, the last Tuesday of 2024, better yet, the last day of 2024. So how are y'all feeling? Are y'all excited for what 2025 is about to bring? Well, if you are not, I'm going to tell you why you need to be excited, especially if you are tuning into this video and homeownership is your goal. So the big boys, Bank of America, Realtor.com, and a few other sources are reporting that the housing market is going to boom next year. Okay, we are going to experience an influx of buyers, an influx of more inventory on the market. So you should be excited about that. Now, I can't speculate what's going to go on with the interest rates because I am not an economist, but I can just share with you what I've read already online. And if you don't believe me, do your own homework, which I advise you to do. So in preparation for this new market, this changing market, and in the preparation for 2025, today we're going to briefly hit on down payments. Okay, this is like a dun 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 dun, because the misconception about down payments is that you have to have the full 20%. And that's only in some situations. A lot of times that's if you are a small business and you don't have tax returns, then you may have to put down 20%. If you are purchasing an investment property, you may have to put down 20%. But if you are a first-time home buyer, just a traditional buyer, okay, then with a W-2 income, then you may actually just only have to put down 3 to 5% down. That's awesome. That's amazing. So I'm here to let you know what those numbers look like and where you stand with purchasing your home. Don't forget that in my comments below, I do have a buyer's readiness assessment that can help you actually determine how much house you can afford, which can also help you determine how much down payment you may be looking at bringing to the table. So let's get started. So traditionally, with the loan products like the FHA loan, you are bringing 3.5% down. Okay, so with 3.5% down, that is not 20. Also, if you are going conventional, you only are bringing 3% down. That's not 20. If you can get USDA financing, which is a type of government loan where you have to buy property outside of the city limits, more in the rural areas, then you're going to get 100% financing, which means no money down. Okay. If you are a VA loan, you get a VA loan, right, which means that you have served in the military, the armed forces here in the United States. We thank you for your service, and as a condition of that, you also receive a mortgage with no down payment. So that's 100% financing, $0 that you have to bring to the table for your down payment. So the misconception of that 20% down does not exist, right? But I will say that the more money that you bring to the closing table as far as your down payment is concerned, that can lessen the amount of interest that you're paying. It can also lessen the amount of your monthly payment, your monthly mortgage payment amount, because you're not having to borrow as much. Remember, your interest payments and your mortgage, your principal payments are based on the amount of the loan that you get. So if you actually purchase a home for $250,000 and you bring, 20% of that, then your loan amount is only going to be what you borrowed, not your cash amount. Okay. So with that being said, that's going to actually lessen your monthly payment amount. Now, I've had a buyer move here from California, and they sold their house in California. Their house here in the Lake Wylie area was like $600,000, right? So they took like a good chunk of their proceeds from the sale of their home and put it as a down payment towards their home here, and literally their loan amount was cut in half. So they only have like a $300,000 mortgage because they put down a higher down payment. Now, I ain't balling like that, and a lot of people are not. But at any rate, if you even put down 20%, that's still going to change the amount of the loan that you have, which will change your monthly payment amount. So again, you do not need 20%. That is not true, not in this day and this time. And there's also down payment assistance programs to help you. I know here in South Carolina, the down payment assistance program that kind of is what statewide program, they give up to $10,000. So back to my example. So if you have a purchase price of $250 and you're bringing 3% down with a conventional loan, now your down payment will be $7,500. If with that same purchase price of $250,000 and you have an FHA loan at 3.5% down payment, then that's going to bring your down payment up to $8,750. But at any rate, many states do have programs to assist you with your down payment. So get with someone who knows and who can assess this situation for you. Okay. Again, my buyer's readiness assessment has been created for you buyers. Okay. And it's only for $1 where you can actually plug in your numbers, assess where you are financially, and see how much you may have to be prepared for with your closing costs and your down payment combined. Okay. Not saying that you won't be able to get the down payment assistance, but it's always good to be prepared and to know what you have to face and what you could be bringing out of pocket to the closing table. Again, I just want to hop on here really, really quick. This is the Homegirl Tuesdays at 10, talking about down payments and why you do not have to have 20% down. Okay. But again, the more you bring down, the less amount that you'll be borrowing, which will decrease the mortgage payment amount. And it's all good and dandy. But I know when I bought my house, I wasn't bringing nothing but the bare minimum. So that's all in good. The goal is that you get into the house. The goal is that you actually secure the dream and the goal of home ownership. So let me know if y'all have any questions or concerns. This has been the Homegirl Tuesdays at 10, and we will see y'all in 2025.